Welcome to the latest Motley Fool scoreboard. I'm on in Chock-a-Bloom. We've got longtime fools David Meyer and Lou Whiteman giving a 1 to 10 rating to the poorly named Johnson & Johnson spinoff Kenvue, ticker symbol KVUE. Talk about the strength of the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. We all know their products, but both of you still give them a 6, Lou.
Yeah, so Kenvue is the former consumer products business of Johnson & Johnson. It spun out in 2023. We all know these brands: Tylenol, Zyrtec, Neutrogena, Band-Aid, Listerine, all of these great brands. I tend to be drawn to spin-outs in a lot of cases because I think a lot of time the independence, the ability to make your own capital allocation decisions, all that, it's just what the doctor ordered, so to speak. You see what I did there, guys. But it hasn't worked out so far for these guys, at least not for investors so far. The skincare business particularly is underwhelmed. I worry here. This is a bigger trend in retail towards barbelling, where the generics and the store brands are doing great and kind of high-end niche stuff does great, but these big, huge, ubiquitous brands in the middle struggle. And I think that's what's happening here. There's a lot of potential here, but they have to figure it out. So a 6.
Yeah, I agree. I think 6 is about right for the J&J spinoff. It is absolutely hard to argue with such a great portfolio of healthcare and hygiene products, but the growth is hard to come by. And I think part of it is, we've seen some inflation, and as a branded seller of branded products, you would like to be able to raise prices easily in an environment like that. And it's been proven to be very difficult, right? Consumers are careful with their money. And so it's an interesting set of trade-offs. We'll see how things continue to move forward.
Yeah, the Midwest is jealous about how flat the sales have been at Kenvue over these past few years. Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. David's at a 7. Lou's at a 6.
Yeah, so the resumes here look perfect. I don't think, this is exactly who you'd want to have running these. The CEO, Throne Morgan, I joined Johnson & Johnson at the turn of the century. He ran this business at J&J. But look, as I mentioned before, CEOs are ultimately judged on performance. Stock is down 13% since it went public versus a 46% gain for the S&P 500. I don't think it's his fault, so I'm not giving him a 2 here, but it's his job. It's his team to fix it. And until I see that happen, I just can't go too high.
Yeah, I'm just a tick higher at 7. The CEO and CFO are both experienced executives that did come from the parent company following the spinoffs. And I agree that the others in the C-suite have impressive backgrounds that even though they came from other companies, but it's spot on. It's not necessarily what you're doing for me now in investing. It's what you're going to do for me. So we'll see how they manage things going forward.
Financials, a 10 is a fortress. A 1 is yikes. David's at a 6. Lou, you're at a 7.
Yeah, this is almost a score. I mean, I just don't see a lot to worry about here, which kind of is a plus. Balance sheet is nearly $9 billion in debt, about $1 billion in cash. There's some work to do after the spinoff, but that's pretty typical, and they can handle it. Dividend yield north of 3%. Looks sustainable to me, I think, so it makes it somewhat attractive. The real question here for me is growth. We've talked about the business, all the financials. This just looks like a mature and stable company. Nothing to worry about, but give me something to get excited about, guys.
I will say the one thing that gives me some pause is that profit margins have been trending down slightly. I think some of that is associated with having to deal with the inflation of its input costs. So if there could be continued margin pressure if inflation picks up again. Well, again, as CEO and CFO, we'll see how they manage that an environment like that if it comes again in the future.
David, let's talk valuation. How well will Kenvue stock do over the next 5 years? How safe is it? Keeping in mind a 10 is a sure thing, a 1 is a lottery ticket.
So I am in the 5 to 10% return camp with a safety score of 6. I do worry about any impact of inflation picking up again, or if consumer confidence slips. if consumers get a little worried, they could push away from any branded product to cheaper alternatives. But I will say that 3.5% dividend yield is nice.
Yeah, I'm at 5 to 10% too, and total return is doing a big part of the heavy lifting here for me. To go back to the top, I do worry about this is a long-term trend that house brands have gotten really good, and we as consumers know that it's basically the same thing. So this is a world of house brands and little niche brands that get influence followers, and these big brands we grew up with are just in for some hurt. I feel relatively safe that even without growth, that this battleship will continue on. So safety score is a 7. I'm pretty optimistic there. I'm just not optimistic on this being a growth stock.
Yeah, I feel like it's one of those companies that, hey, if it fell 50% tomorrow, wouldn't have to do much research to be like, hey, this is really interesting right now. Maybe I'll buy, But barring that, let's talk to top it. Let's find some other companies y'all might like better, David.
Yeah, so I think one to consider is Church & Dwight. This ticker symbol is CHD. It's got a little more growth potential, at least according to analyst estimates, somewhere in the 3 to 5% range, and even more stable cash flow generation, which, if you're looking for a total return type of a play, that's exactly what you would want to see.
Right for this minute, I'm going to go with PepsiCo, PEP, which, it's been selling off. The multiple is, I mean, maybe going back a decade or so. And look, there's a lot of consumer headwinds here. It's some of the same themes. At the end of the day, though, I think I feel better about the staying power of its brands than I do with Neutrogena in that world I was talking about. So just something to watch, at least.
Thank you to both Lou and to David. They've given Kenvue a somewhat low overall score of 6.1 out of 10. With all 5 category scores averaging in the 5s and 6s. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is NVIDIA. Till then, full on. All right.
Okay. I mean, who better than this panel to talk about beauty products, right? Right? I mean,
I just put better names for the company Kenvue. Here were the things that my prompt got. Vivenza, Canova, Nuvana, Evoke with a Q-U-E, Zenview, Kenwise, Veritas Health. I feel like there is something like that.
There's a Veritas Health.
Right? Yeah. After this exercise, I kind of like Kenvue more.